Here we are. MMT Tom is in a live trade with that right elbow gap opening bell on Google right here on the SMF platform. The ratio trend high peaks at 6.7. Tom, can you tell us, and I'm going to blow up just this part of it, can you tell us where you got in?
Yep.
And you're covering half down at the bottom because you're changing the wrong way here. So you might want to take the rest of your profits.
I just did.
Okay, so let's go through it.
Yep, my entry price of 100 shares was at 506.39.
Okay, wait right there. Right here where my pointer is, there's a 20-minute bell, everybody. That's perfect right there. Right slightly goes up there and slide that way. That's an excellent entry, Tom. Then it slides again down here, and it gets that teeny support. Now look at the 3, the 6, the 9 to the peak with the 3 and the 6. So what does that equal? 3, 6, 9, 12, 15 to the price action teeny line. And a teeny is $1.50 up. So when you start to turn and you couldn't break below 35 here, you hit a ratio low of 0.46. And right now you're leveraging up to 0.56 equals $13.40
Alert
at the current price spread in the SMF platform. What you would look for, Tom,
1/2 delta
is how did you identify the high here and how that you would identify the SMF half bar up here at 505.50, meaning that's your next, as you go up one teeny, because that's from this teeny lows here. You can see that you've gone up $1.50 per line and how accurate it is. Now, the key is this half bar is 505.50. All right? Right now, it's 504.25 by 504. Look at how wide the price spread is with the public, 43 pennies. Now, watch the half bar here. That's your half bar. Put a limit order out to sell short there.
$SPX intraday percent at below
I do have to give you a passing grade on the entry because you did right here at the reversal. Now remember that you still have one teeny contraction from that blow off high where you got short, and you're still within the teeny range of $1.50 movement, 3 minutes, 6 minutes, 9 minutes, starting 12 minutes across here. You are below 35, and you're falling weak at the price action, Tom. Go ahead and put a short out up there. Tell the group what you did in the rest of the trade, and we have price failure at this point in time. So there's the right elbow gap with the 9 exhaustion to the teeny line to a lower and it spikes up, but it didn't get it never did close above that line. It just was a sell and everything. So
GOOG plus half
on that price action in here, Tom, what you're going to want to identify is the next reversal. Tell the group here how you identified that excellent entry. That's an A+ entry within the opening bell of that, right? So tell the group how you did that. How did you identify it? What tools did you use? Sir? Start.
SPX
Yeah.
plus half.
How did you, I want you to identify a secondary reversal working with taking profits down in here because it hasn't broke it yet, but it hasn't broke it and it's right in the $1.50 up and down range. Bam, bam. But the pullback, the right elbow gap up here, A+ grade, tell the group how you identified that because you're going to use the same skill to identify this 3, 6, 9, 12, 15 bar from this teeny line on over. That's 15 minutes. $1.50 teeny. With an IR, you got a 0.54 and a 0.46. So you know what you're doing and you're consolidating that. One of two things are going to happen. Either you're breaking these highs or you're breaking these lows and you're going to come down one teeny, almost, it could be, so you have, so from the top,
mute.
Yep. Here we are with the $1,200 call up and out of the money on the S&P. And intraday, we peaked at 13.53 from the 1190 close.
Alert $SPX plus
Brian
half.
Plain just got hit here at 1210. Now, we created the low of the market, that one contract, only using one, because you can't lose a lot of money. But notice that our entry is closer to the close here, that print 1210. So we'll talk about that in the next upcoming video. It's on the record, though, of the Google trade. Okay, and here are these other contracts here that didn't have much of a spread. The way to buy the 1220 call here is to bid this at $4.20. This right here would be a 1220 call bid for now at 4.20 ratio on the bid price. You've got an $8 high. You've only got, look at it, you only have a 60-cent spread. It's too early on this one. You just, okay, so you got a 720 print right here, close to that close. That's your last print. 1270 print right here, Mr. Plain made that SMF, made that market low.
Alert GOOG plus
Oh,
half.
1280. See? Now, we bought that 1210, and as a mark, but notice that the 1190 is a close, and look at the last print, 1280. Now, what Brian Plain can do, he can make a market. He got hit at the low. We know 1353 was the high, but look at the bid and look at the ask. It's 1190 by 1280. Because our print that we created, the low of the day here at 1210, but we only used a single contract to try to make a print that everyone looks at out there, and we did right here. Now that we have made that market as a market maker, Brian Plain throw a limit order out. He can throw a limit order out at 70 pennies to sell, and he makes a market. Then he can come right back over here and bid this. So he could work that side of the market and also bid another contract to buy at $12.
Alert GOOG intraday percent.
So he could have a limit order right now with what the S&P 500 is doing on the opening bell. He can put a contract out here, buy another one at 12, but still have the one. See, now come off of the 70 print right here. Okay, come off of it. So look at the contraction. It's 12 by 1280. He just canceled 1270, so he can see that 1280 is there, and we're creating this market in the pit. We're creating an 80-cent spread. SMF is. This is about as good as it gets. I'll have to come back to the Google trade momentarily. We have another print that was created, 1250 on 20 contracts, time 7:01 a.m. Pacific Standard Time, 8/22/2011, opening bell, 31 pennies into the tape, with the dollar wide bid and ask. We created the 1210 print. 1353 was on the high from that close of 1190, exactly where that bid is. Now, we were showing the bid and ask on how to be a market maker within the spread, whether it be this one or Google calls or any of them for that matter. The same rule applies, and the Google trade as the S&P trade, they're all about making markets at certain price levels. I'm going to conclude the $1,200 call. The video reference to this S&P at this time was 7:01 a.m. Pacific Standard Time, with people coming in. The volume was very light on the opening bell because people do not know. See, 4 more got printed at 1280. Now they're leveraging back up, and we made that low market. So and we flashed it a couple times. So put a bid back over there. Let's make it a dollar bid and ask wide, Brian Plain. Take your bid up to $12 there. Right here. There you go. See how 12 came in? There's a little delay, but 12 was there. We've created a dollar bid and ask. Now it's 90 cents. Someone was that you coming in at $12.90 to sell? See, because we're a market maker at 12.10, we can work this side of the market to sell and this side to buy at the same time within it. We already created that. No one else did that. We did that right there. But we only are using a single contract because the S&P 500 is very strong. It's trading right here on its opening bell gap. This is a 3-minute in the platform right here. Look at that teeny expansion from 1131. Bam! Right up to the high, to that first morning reversal. We're well above this half bar. It's a mathematical equation. That's 1137.68 handles, S&P MMTs. And right now you're reversing and you're holding that teeny line. This is the right elbow runaway gap, taking out that bear, that short seller from Friday's close. They put in that high and you get that reversal down here. But look at here. If we stay elevated over here, MMTs, we're at 65.
Alert GOOG intraday
We're going to hold that
below
teeny.
15.00.
That's the intraday range on there on this S&P. 65 is what I'm showing. I could be off. I got 2.02 ratio per line in the here, and I'm sliding this half bar on the S&P right now, 1141.49, and the S&P is ticking at, let's see, S&P is ticking at 1137.71. So what we want to do is make sure that the data feeds are coming in right, and they are. There's a little bit of a lag. It's 59, that and it's 51. 68 is a high, 51 is a contraction. This is the S&P 500.
Alert $SPX below delta line
15.04 handles. I've got a low of
1131
1131 and a high of 1145 to that top reversal where it exhausted itself from that right elbow gap. And now it's coming down. So Brian Plain, cancel the $12 bid and put those out at $12.70 to sell. Because we're reversing at a major teeny line, so we must change. We already own them at $12.10. We're just making a market. We're now put the buy another contract in case this guy disappears. Put this order out at 9.60.
Alert $SPX intraday
as we're
below
reversing here.
50.00.
We're losing value here. We got a reversal. That's called a the market maker dropped it down. But you're still in control. You're 1270.
99.
You're okay. So the VIX is at 99. The
The
fear indicator
XN
is
is
going on.
79.
All right. So we have what the MMT flag is telling us is that we have elevated fear indicators coming in on an intraday breakout, and that's 7:05 a.m. Pacific Standard Time. We made a market here. We're in at 12:10. We're going to create another sell, because that way, by our transactions on buying and selling, is that at least we can create a market that people can follow. They don't have to transact in it, but at least we're making the market. We'll return to the Google trade, which I will go back to right now. And you can clearly see that the Google trade, the 510 put that Tina talked about getting short. Tina, but let's get back to Tom. Are you ready about your trade and what you did with this right elbow gap again? There's your X. You got an A plus on the short here. So go ahead and go through that part.
From the beginning?
Yes, if you would.
Yep, okay. On the opening bell, I was watching the IR.
Okay.
Was going right up to 100%, and I just kept watching it until I started to see it turn, and it got down to about 85%. I still held on just a tad till I saw it drop below 85 to about 84, and I entered in at 506.39.
That's right there.
Yep. And at that point I wrote it down, and I started to see the IR turn, because it came way down to about, I think it was 23, and it started to pop up again around 34. So I took 50 shares off the table at, let's see, it was 503.40. I took 50 shares off, and I lowered my stop, and it popped again, and I took the other 50 at the remainder. I'm at 503.64. So I kind of did okay.
Let me see what this half bar. Oh, well, that's good. That's below this half bar.
5.00.
Did you say 503.64?
Yes, that was the last of my 50 shares. Came out that
right. And that was below half of this up bar right here. So that's good. Keep going.
At that point, I was done. I'm trying to get back in right now.
All right. So you're going to have to put. Look at the IR. You're at 24 and 50 right here. So If we don't go below 50, we're going to anything going back toward 5.5 is what we're going to wait to do. Put a limit to sell short over here at that bar. 504. Here, let's use this half bar. 503.89. Up and out of the money. So if you come up and hit it, you get in. It's 503.48 by 49.
$SPX above Delta line.
It's 30 cents wide in the bid and ask.
139.70 at +3/.
So if you're looking for a place to get in, that would be your first area. As long as you don't close above that teeny line, you're okay. You can go up and then get a wick down like this, as long as you don't close above it. So this is what you would be looking for if you come up and you get in this. I lowered the level. It's, if you like me here, why don't I just take you up to the original half bar? Let's go back to 504.23. Put your short out at 504.21 in case it shoots up there. But it doesn't do that unless this goes back toward 35. See how it just shot up there? And if you don't have the limit order up there, you don't get hit. Once you do get hit, you can go up above it, and if it comes down and sits on top of the teeny line, and this isn't going down towards, this has got to contract. If this contracts, you already know what's going to happen. So he just tried to bid pop it. So that's, but now it's 83 by 07. That's 23 pennies wide. All right, between the bid and the ask.
Alert GOOG +half.
Stock is still up 11.94 in our system right here, in our pricing system. This low ratio was almost a half delta gap. That's 0.46. At 7.318 equals $11.07.
Alert $SPX
right
intraday descent at below 50.00.
And it equals that many dollars right now. And it's $1 off of that ratio low. Right here, 0.46. That's nice. It's pulling back. And everything is going descending value, Tom. So when this happens, what you do is you go over here and you drop it back down to 503.89. Okay? And it's 20 pennies wide. It's turning. The robot's going to turn that with the 10-minute decline. And we can see there that the 3, 6, 9, 12, 15 line, we broke down and we're starting to break below this 15-minute consolidation here. But the body, we'll take a look and see where the body closes, but everything is weak over here, and if this goes toward 49, you're going to come down in price. And that's what's happening right here. Okay? You're only 70 pennies off of the low now in our platform. And 0.49 is coming that way, and you're going to drop in price here.
Both volatilities are on 100%.
Yep. Both volatilities on 100%. All right, Tom, I'm going to have to conclude this video with the S&P 500 and this Google trade with you because you did excellent. And buying and coming out of your shares, scaling out, is also an excellent grade that an MMT must have. And therefore, we are grateful that the other MMTs can learn from this 15-minute price action failure. That's where we contracted, and we still struggling at the low end of the teeny though. That's $1.50. So we're breaking down another to another teeny. We're not closed, but the weakness is definitely built in. And look at it, 0.47. It's really close to the intraday low now. Look, that equals that many dollars. Okay. 11.25 is the last print. 11.07. So buying the pullback is what we would look at doing. And we'll go to the call contracts next.